Hello, everybody. Green Effect Podcast, Season 6, Episode 6. Do you know what that means? We're one episode away from, go ahead and say it. I know. We'll celebrate that in the next episode. All right. But just say the season and the episode for the next in 2 weeks. All right. You'll figure out what that means anyway. All right, man. I won't even lie. It's a Sunday morning. I just woke up about half an hour ago. We've lost an hour. Lost an hour. In a business where I need more hours, we have lost an hour. Opposite daylight savings time, where it's like you get it back, I guess. I don't know. But anyway, I kind of just woke up because they say, hey, do things super authentic. So great. I'm going to try to squeeze in the recording of my podcast on a Sunday morning where I have lost an hour and I'm literally supposed to be picking up one of my really good friends to go to the Toronto Home Show. So if I sound like I just woke up or look like it, I kind of did. Coffee's flowing and off we go. Hey, so fun fact, learned something. I don't know if a lot of you know, but I found it a couple of years ago, pardon me, that I had extremely high blood sugar, like off the charts, you're going to die tomorrow type levels of A1C, if you guys know that. Anyway, I've been down this journey for a couple of years now where I'm trying to, eat better, figure out the blood sugar. My blood sugar line looks like flat line now. It's freaking amazing. In fact, I even taste things differently. Anyway, but where was I going with that? I had something really good. Oh, yeah. So when I wake up in the morning, I learned this. So, hey, if you're looking for nutrition tips, when we say finance, life, and business, this is the life part. So here we go. I guess I didn't know this, but I guess you overnight you actually dehydrate a little bit. Had no idea. Apparently that's a thing. So now when I wake up, I actually have like 2 or 3 glasses of water over about an hour, hour and a half. And then I pound back my coffee. So when I say I've been awake for like I just woke up, I've actually been like half awake for about an hour or so. And then I figure, all right, water's in. Let's fuel with some coffee with my Dunder Mifflin mug and get rolling with the podcast. So anyway, here we are. If you need any more useless information, we'll probably do it at the beginning of the shows going forward. Anyways, let's get into I actually am prepared. This is not going to be a completely shitty podcast. There's actually some really good stuff that we're going to talk about today. So, because there's no shortage of things to talk about. All right, right off the bat. So, and I'm going to time this podcast or put a timestamp on this podcast a little bit. Yesterday, if you follow me on social media, yesterday, I attended a retirement home. I'm not sure what the right term is. Retirement home, retirement living. Probably should have asked the right term for it these days. But I attended a retirement home with a fantastic realtor partner of mine, Jason O'Keefe, with Real Home Experts. I was invited down to talk about reverse mortgages. And reverse mortgages, it was actually really interesting because I think when you're in the industry, whether it's mortgages, real estate, or whatever your own industry is, you sometimes don't realize what other people kind of perceive something that you know everything about or very close to everything about. And it was a fantastic session. We had a room of individuals who were exploring actually signing up, looking to live in this particular retirement community. We'll go with retirement community. And it was very interesting because we were ready for questions. And of course, we do reverse mortgages. And listen, before you get all up on me, oh, reverse mortgages, whatever, just relax, right? Reverse mortgages have their place. Like any mortgage product, and I've said this before, like any mortgage product, there's no bad mortgage product. It's just really poor execution explanation from the mortgage broker. Every mortgage product has its little thing that offers a solution to the individual. And, I know reverse mortgages in the past have had a bit of a bum rap based on probably people just advising on it wrong or not understanding the ins and outs. Anyway, great session, explained a lot of stuff around the product, how it works. And I think, again, if you identify the right or if the right product is identified for the client for such a niche product like a reverse, the list goes on, like a reverse mortgage, a Manulife One, a private mortgage, an alternative deal, then there's a solution for them. So great session. Jason was talking about the market and what to do to plan for the market and what people have to do to prep their house. And I will tell you this: listen, if you're thinking of downsizing at some point, and I look at my wife and I, so our kids are out of the house, again, believe the hype. Empty nesting is where it is at. Anyway, if you're getting to that point, start, or if you're getting ready, if the kids are older, you're thinking maybe there's some light at the end of the tunnel, these little buggers are going to leave, start to purge. Because I think the biggest challenge right now for baby boomers in particular is purging your stuff. So, Jason put it really eloquently yesterday. I'll put it a little more bluntly because it's my podcast and I can do that. Where baby boomers, I think that generation, they were right after the war. So they learned from their parents to save everything and hold things and save and really make sure that there's never a shortage, that they're saving the milk bags for their sandwiches and all sorts of stuff like that. They're reusing plastic containers, which, by the way, those are probably really good behaviors we should all have right now. But you know, it's become a struggle for Gen X because it's all to them. There's no sentimental value. It's all crap, and I say that harshly, but that's the reality of how Gen X looks at these items. And so I know for us, my mom in particular, she's up in her 70s now, and I know she's purged a lot. God, we're my wife and I are late 40s. Kids are out. We've started to purge. I'm on Facebook Marketplace constantly trying to get rid of crap that we just don't need anyway. Forget the kids. We just don't need some of the crap we've got, so you may as well sell it now and get rid of it. So, anyway, that was a big takeaway that we had yesterday, when we were talking with, these folks that were, looking to move into the next stage of their life within their retirement. So, a great session. All right, so let's get into the economy. Good God, what it's a funny economy right now. Obviously, we have the very unfortunate turn of events, overseas, right? Iran, Iraq. I'm not going down the route of talking about, um, the war and because I find that there's so much possible misinformation out there, or we're just not sure what the hell's going on. Like, let's face it, we just don't know. So I don't want to go down the road of here's my opinion, you're right, you're wrong. Listen, I think any war, anytime we got to pull out guns and start shooting people, is not the answer. I mean, I don't know if the ends could justify the means. I don't think that is ever a case with war. I believe as of right now, there's a few American soldiers that are dead. Like they're not coming back to their families in a conflict that we don't really even have clear direction as to why we're doing this. And I'm sure people will jump in the comments, say, "Yeah, there's a reason," and that's fine. I'm not talking about that. It's more just the fact that there's so much confusion. That's my thing, right? There's just a lot of confusion, which, is really sad. So, anyway, having said that, like I said, there's a lot of stuff going on. So I just want to break down some stats and just tell you where we kind of think things are going. Because as I've said before, when we're talking about what are the economic factors, where are things going, are rates going to go up, down, left, right? You really can't predict anymore. Who the hell knows? But you can look at stats and forward leading indicators because, as I've said, there's so much crap out there. You got to look at actual statistical data that's happening in real time to try to determine what is going to happen. And I think any good mortgage broker working with their clients right now is not feeding into any of the media. And here's what I think. I heard another guy say this. That's not the way this works. You have to be on top of the data, forward leading indicators. If you're not a mortgage nerd as a mortgage broker right now, and you're trying to give advice to clients, you're not doing your clients any sort of good service. Like, you're doing them a disservice. So keep that in mind. If your mortgage broker is not a bit of a mortgage nerd, knowing the numbers, ask yourself some questions as to what you're doing. So, all right, let me just climb off my soapbox and get back into reality. So, all right, so one of the biggest things we're following right now is obviously the bond yield. So, had a really weird moment last week when the US began their strikes on Iran. We didn't know how the markets were going to react. Nobody knew. We're like, this is new. What is going to happen? And a lot of people, it was what we noticed, that there wasn't an immediate reaction, because I don't think the markets even knew what to do. They didn't know what to do. When I say they, I mean everything from bond prices to traders to you name it. Well, we got our answer very quickly at the beginning of the previous week, where we saw a huge spike in bond prices, and then it kind of settled out a little bit. So beginning of last week, we were getting emails from our lender saying, hey, heads up, rates moved a little bit, but then they said, hey, just heads up, the rates could jump. We got that warning. I went out to all my partners and said, hey, heads up. If you got a client who is thinking, or they're like, I'm trying to get in to see Steven, not in there yet, whatever, we will prioritize those clients to lock rates for them. So we did see some movement. So remember, the 5-year Government of Canada bond yield, Google it. That is your indicator as to what's going to happen almost in real time, or within about a week, with fixed rates. So we're currently inverted, which means if the bond price goes up, fixed rates traditionally follow. We normally see the monolines move their rates quickest, and then the banks sometimes hang around for a few days. I've seen them hang around for a week and a half to capture a little more market share, take a bit of a loss on some mortgages, but at least get the volume moving. So follow that. And I think if I haven't already said it, if the bond price comes down, that means the rates follow that as well. So again, a lot of volatility last week. We monitor, we Google it. You got to monitor the 5-year bond yield to make sure that you know what could possibly go on. So that's on the side of fixed rates. Now, remember, fixed rates and the variable rate market are completely, I'm going to say they're mutually exclusive, because things that happen with Tiffy Boy up at Bank of Canada, his comment, stuff like that, could impact bond prices, which of course directly impact fixed rates. But for all intents and purposes, we're done with prime rate moves for the foreseeable future. This is another comment I'll make. Listen, anybody you're talking to about mortgage rate predictions, their best guess is a 6-month timeline. That's it. If anybody says, I know what's going to happen in a year, really? Tell them to go pound salt. There's no freaking way. You have a really low probability guess. After that, forget it. Now, I'm going to digress. Let me get up on my soapbox just one more time. Please follow me on my journey here. I think that it is so critical. Your mortgage broker, after they do the mortgage for you, is in constant contact. We're in contact with our clients on a monthly basis. Monthly. What's going on? What's the news? What's data on what's going on in the market? I'm sorry. Banks, this is where I have a lot of my clients that want to work with me, because we're in a volatile market. They need somebody in their corner to give information that is statistic based, not feelings, emotions, and whatever freaking bullshit is on social media right now that might not be correct. So I think that is one of the biggest things that you have to look for when you're looking at your mortgage broker and who's going to support you going forward through your mortgage term. Because don't tell me, I would say 1 out of 50 people will actually do it themselves. Don't even try to kid yourself. We do this for a living. This is where you got to make sure you've got a mortgage broker in your corner going forward. Okay, let me get off my soapbox and let's get back to what I was talking about, whatever it might have been. I can't even remember. So, yeah, so you can't really predict very much past, say, 6 months. I don't know what I was saying, but let's just keep moving on. All right, so consumer confidence index, folks. Just remember in Canada. Oh, so let's talk about real estate a little bit, okay? So, and if you're wondering what I'm doing when I'm looking up, I've got my notes and my stats that I'm looking at, so I might jump around a little bit, but I'm trying to give kind of a picture as to what's going on. I got excited in that last segment. Let me just have some. All right, consumer confidence. So I post this on social media all the time. If I sound like a broken record, you better follow me on social media. SG Mortgage Advice everywhere. Consumer confidence, believe it or not, and the real estate outlook is increasing. So as I record this beginning of March, it has gotten a lot busier in the last 10 to 14 days. A lot busier. Can we afford it? I think, and I've said this before, our slowdown at the beginning of 2026, other than obviously the uncertainty with, the US government and all the other trade crap going on, it's the weather. For those of you who are not in southwestern Ontario, we have been in a deep freeze. I don't even want to leave the house. You want people to go out and buy a house in this weather? Forget it. No coincidence. The last week and a half, we have been melting. Okay. Saw the sidewalk for the first time in a little while. So, right off the bat, we're seeing additional confidence in the market. That pent up demand. I posted a stat proving that I'm very sure that there is pent up demand based on the number of sales historically this time of year and just the number of sales per individuals in the country. Totally cool stat. Go back and look through it because it proves that I'm sure there's pent up demand. And we're seeing that in the last 2 weeks. So consumer confidence, we're definitely seeing that come back, which is fantastic. Okay. Moving on. Give me 1 sec. I'm just trying to get to my next wonderful thing. Okay. So we have to understand what's happening with housing starts. So remember I said earlier, your mortgage broker's got to be on top of what's happening statistically. If you're a real estate investor, and I think I said this in the last show, but I'm going to say it again. If you're a real estate investor, you have to be incredibly on top of your numbers. And I think, listen, in Southwestern Ontario in particular, real estate investing, man, those people have picked up their toys from the sandbox and they've left. They've gone home. They're done. Real estate investing right now looks very different than it did 5 years ago. 5 years ago, I've said this before, 5 years ago, you buy a rental property, the rate's 1 point nothing percent. You're pretty sure the rent's going to work. Money is free. Let's buy a rental property. Didn't really run the numbers, but hey, let's see what happens. And a lot of those people made some great money as long as you didn't buy in 21 and 22, because now you're getting pinched. And so what we're seeing right now is there is tremendous rental supply, both being still constructed and finishing and coming to market. Now, let's do some supply and demand math on our fingers. Okay. You got a whole bunch of inventory coming to the market and finishing. And keep in mind, a lot of new Canadians normally rent first when they come to Canada. They're out because we've cut off immigration pretty much. All the supplies coming. Demand is also probably dwindling because of less immigration. And you have the real estate investors that didn't do their homework when they bought homes to rent also selling because they realized they bought a crappy rental. It's not good. So the typical real estate investor right now is not your buy a house, rent it out. No, it is buy a house. How do we create multiple streams of income? Additional dwelling units, duplex it, triplex it, put in 8 units, whatever. That is today's real estate investor. Savvy. Is there multiple sources of income through the property? Those are the types of things that they are looking for. And I love it. I love it. We have the best. If you're a real estate investor right now, you are the best investor out there because you're doing your homework. So keep that in mind. Side note, additional dwelling units, popular. Most banks, not all, but most, don't like that additional dwelling unit thing at all. On the additional dwelling unit side, though, mortgage brokers definitely have access to lenders who will include the value of the ADU and the appraised value, because some don't. And we even have a couple of lenders that will do a full construction type mortgage, purchase plus construction, whatever you want to call it, to put in the ADU. Easy. So more details on that, DM me and I can give you some more info. Moving on. We already talked about immigration. Like, we have reduced it significantly. Okay. And I think what we're seeing, listen, after 3 years leading into 2024, we still grew by 1.7 million people, right? And in a country of 40 million, it's a lot. And I think that's like from 2021. Okay. So during the boom, right up into when we brought in the new liberal government, same government, but different, different cast of characters. They had to take time to slow down the train. So between 21 and 24, like 1.7 million we grew by. It's a freaking lot of people, right? And now we are decreasing. And even permanent residencies are way down, way down. A lot of it, I think, last year, the growth in 2024, a lot of it was backlog with bringing in or finalizing the temporary residents that were here and getting them their permanent residency because they were in the queue already. But man, that has just completely stopped. So it'll be super interesting to see what happens going forward. All right, moving on. So let's talk about total types of buyers that are out there. So I've been doing I do quite a bit of presenting to real estate offices, clients, stuff like that. And the one stat we talk about is who the hell is buying houses right now, right? And a lot of them, yeah, there are investors for sure, but a lot of them are first-time home buyers or second-time home buyers. Investors are out there, but they are way down. Like, I mean, way down, like I've talked about. So there is, and I talked about this already, there are a huge number of first-time homebuyers out there that are sitting on the sidelines. We've got the stats to back that up. They're sitting there. And so I think that is slowly going to be your biggest client base out there or demographic that's going to be buying homes. And another reason why they are like gold right now. I remember in 2021, 2022, nobody wanted buyers. They all wanted listings because they didn't have enough inventory. Well, now we got a ton of inventory and we need the demand part, which is the buyers. What is gold right now? Our first time home buyers. Here's the reason. So if you're selling, you got a first time home buyer come to you, you may want to prioritize the first time home buyer over the repeat buyer. Let me explain. The first time home buyers, they can go in with their offer, simple financing condition, no problem, inspection, whatever, but they don't have a house to sell. So first time home buyers are gold right now for people who are trying to sell. If you have a home to sell, well, you can't firm up on your purchase to sell your house in a market where we've got a ton of inventory. So this is where I think first time homebuyers have to jump into the pool and have a look, because you're not only can you jump in and really get whatever you want, your pick of the litter, but people want you. You are at the top of the list for people who want to have that people that are selling that want to have buy their home because you don't have a house to sell. Hint and tip, if you're selling your house, that's what you should be looking for. Where are those amazing first-time home buyers? Okay. I want to okay, let's talk about this because this is kind of super important. I got a couple of stats to talk about here. Okay, so 2026 double cohort coming through on mortgage renewal. Well, double cohort in this case is all the folks that got those 5-year fixed in 2021 for 1 point nothing percent. It's 5 years later, they're coming up for renewal. The other part of that cohort is the folks that we all did mortgages for 3 years ago, and they all took 3-year fix because they're like, I don't want to take a 5 at 5.75% because I think rates are going to come down. Bingo, we're here. Double cohort. So one group of people are getting, I'm not going to say payment shock because a lot of those folks have paid down a lot of principal, as long as they didn't rack up their debt. But then you got the other folks that are coming at 5%, getting into 4. They're pretty happy. So it's not too bad. I want to give this stat. Change in monthly mortgage payments among borrowers renewing in 2026. And I want to make sure I word this properly because it's confusing. There is an average of all these 60% of mortgages that are coming up for renewal, the double cohort, an average of an 8% increase. However, to break that down further, about 25% of borrowers, so 25% of those renewals, they're going to see their payment increase more than 20%. Okay. I'm going to say this. It hasn't been as bad as I thought. People are like, holy crap, I can't afford my house anymore. We're generally not seeing that unless there's other circumstances, multiple car payments, stuff like that. Okay. Which leads me into my next statistic I want to share. And that is household debt to income ratio. Okay. So we are extremely high on that debt to income ratio. So, how many dollars of debt to income do you have? Now, we're still high, but we're not as bad as we have been, which is kind of wacky. Okay. We were at a high at one point of almost a buck 70. So a buck 77, I think it was, which means for every dollar of income, you have a dollar 77 of debt. That is horrible. Okay. We're actually down. We're about a buck 62 right now, which is kind of a freaking miracle given all the stuff that's been going on. So I think mortgages are not as large anymore. People are selling mortgages are just smaller because let's face it, a big part of that debt is mortgage debt. It's the biggest debt, right? So I think in general, it's weird. We're seeing people with mortgage rates normalizing, debt to income is coming down, but it's not as bad as we think. Now, yes, if you've racked up debt, not good, right? And I know life is expensive, so I'm not sitting here saying it's completely amazing out there. Yes, I understand it's very expensive, but the stats are telling us that homeowners are probably not that bad off, other than the crazy everything with, just recently, gas all of a sudden is a buck 55 a liter, buck 60 in southwestern Ontario. So again, statistics, numbers, right? Mortgage delinquency on the rise, but not out of control. All about trends. Yes, the rise is bad. Big picture, it's actually not statistically percentage wise. It's not bad. It's risen a little bit, but not to be concerned about. But geographically is the issue. More in southwestern Ontario than Manitoba, Quebec, etc. It's a geographical issue. So, all right, how am I doing for time here? Whoa, I am almost done. I'm so excited. First thing in the morning, this gets me going, baby. It gets me going. Let's talk more about freaking mortgages. Okay, everyone's asking about where have prices gone for homes. So I have a great stat here. I didn't post this on social media, but I definitely talked about it with real estate agents. Bit of an uncomfortable conversation. Change in the peak. So we all know beginning of 2022 was the peak of the market. Things were the most expensive. For sure, we know that. So I'm just looking at a stat right now. Again, changing the prices from each city's peak. And who's our winner? Who's had the biggest drop since 2022? The Waterloo region. Not far behind is Hamilton and London. Not even Toronto's in the top 3. So for my friends in Waterloo region, we are in the middle, right between London and Hamilton. We are the epicenter of the highest drop in the peak. Now, as a couple of realtors pointed out to me, and they are correct, it is very specific. I'm going to talk about Waterloo region. It's very specific to the house type. Single families have definitely they've kept their value a little more. They've dropped too, for sure. But if you break it down, a lot of it's condo for sure, and a lot of it, to break it down further, single family. I think they said over 800. Like the $1 million homes, I think between about 800 and $1 million are not moving too much, but over $1 million, it's a different crowd. And under about that 800, 750 is still moving because the prices are coming down. So huge drops. I believe Waterloo region is almost 30% from the peak. London right behind at about 27, and then Hamilton's about 26. But don't forget what I said. The most important pent-up demand group is that first-time homebuyer crowd. Guys, if my last week and a half is any indication, those guys are out in the wild looking for stuff, and they're going to probably get something that's really good right now. Anyway, really interesting stuff. There's just no shortage of crazy things going on. And again, I'm going to come back and say it again. Said it before, I'll say it again. You got to have someone in your corner who understands this crap, okay, and can give you the right advice. Because if you don't understand what's going on, and listen, I'm not saying I have the right answer all the time. I don't have the right answer all the time, but I have a higher probability of giving you really good advice because I'm basing my information on statistical data that's happening or has happened, as opposed to, the last psycho lunatic on TikTok making shit up and trying to stir people up. It's a big difference there. Okay. So go through my notes one more time. Make sure I don't want to. A few things I talk about all the time here. Consumer insolvencies are up for sure. That means that people going bankrupt. That's not good. Okay, I'm gonna stop there. Great info there. Okay. Any questions? Let me know. Listen, it is the biggest double cohort right now. Mortgage renewals, folks. Do not sign that damn bank renewal form. I have had clients where I'm talking to them. We're trying to go through options, trying to figure things out. Banks are just throwing out these renewal letters, hoping the hell you sign. And let's not kid ourselves. The bank renewal rates are slamming. They're amazing. They're good rates, right? And so they should be. They're your damn bank for 5 years. I mean, they didn't call you at all for 5 years or talk to you at all, but hey, here's a great rate, right? So I'm not saying the rates aren't good. What I am saying is talk to someone, again, let's just brag a little bit. Someone like myself who's on top of this data, who understands where things are going, who's going to stay in contact going forward. At least get an opinion before you sign that paper. Hey, listen, I'll be honest. If the rate's great and you don't need anything else, take the rate. Cool, great. But if I go through things and I identify, okay, we might need to do this, this, and this for your future, because the banks aren't doing that. Here's your rate, sign it. They're not talking. When I talk to clients who have received their renewal notices or they've gone into the branch to get the renewal rates, I'm like, did they ask you about this, this, and this? No. Did they talk about this part? Did they go through this? Did they ask them questions about your finances? No. Okay, so help me understand. Really what they did here is they just threw a rate at you and hope you'd sign. And the answer is like, yep, that's what they did. Wow. Really? I thought the banks are supposed to have the best advice. Doesn't someone have that slogan, advice you can bank on? Not really. You're just throwing rates at people, which is kind of weird. So get an opinion. Hey, If it's a good rate, I'll tell you, good rate, take it. But again, what if you got all this other debt and we got to do something? Then what? Then what? Okay. So don't just sign that paper, get questions. All right. I got to go. Um, any questions, you guys reach out to me. Remember, 5-star reviews, please. Like me, love me, follow me, whatever. And other than that, stay safe out there, and we'll talk to you guys soon.